So as long as, again, asset based, so as long as the numbers make sense, and we want to be partners in the deal with you guys, right? So as long as you're making money, right, and you're going to be able to sell the property, and we're confident that you're going to be able to sell the property because the numbers are there, we're going to be happy to lend the money out, right? So, and that, no credit, no income, no appraisal also helps closing time frame, right? So we can fund deals in as little as 24 hours, right? Again, I tell all my investors, I don't want every deal you send me to be a 24-hour deal. Right? It's stressful. But we can't do
that. You're listening to the AZREIA Show. If you're looking for quality real estate investing information that you can trust, you've found it. Stay tuned and join the tens of thousands of members that have already benefited from AZREIA, your home for education, market information, support, and networking opportunities that will advance your real estate investing career.
Hey, what's up? Welcome to another episode of the AZREIA Show. I'm your host, Marcus Maloney, and we have our executive director and co-host, Mike Del Prete. How you doing, Mike?
I'm wonderful, yes.
All right, so Mike is feeling good. I'm feeling good. We have Alex Carrilho here from Boomerang Capital. We're going to be talking about money in the market today.
Yep.
So
Awesome.
If you need money, you need to listen. If you need to know a little bit about the market, you need to listen. It's a great time to fix and flip. It's always a great time to be in real estate. So let's talk shop. Let's talk real estate. So Alex, man, how you doing, sir?
Oh, I'm doing great. Happy to be here, fellas.
All right, great.
Thanks for coming.
Give us a little bit of background, man. Who is Alex, and why should we be listening to you?
Man, Alex is the money guy.
All right.
Okay.
I like giving out money to people. I like being partners in deals, and I've had experience in residential lending back in the day, or 2.5 years ago, or no, longer than that.
Okay.
Right out of college, did that for 2.5 years, then decided to leave the residential lending space and got into hard money. And I just love the investor side of things because it's more of a relationship building that you have with people, because when you're dealing with hard money and investors, they're buying a house every month or a couple months, versus residential, they're buying a house and you're not hearing from them for the next
6 years.
5-10 years maybe, depending on the house. So that's what I do.
All right.
So you went from, so you said residential, so you went, let's go back a little bit. You said you went to GCU.
Yeah.
So what'd you major there?
I graduated with business management.
Okay.
So you don't need that in
And
real estate.
what-
I mean,
yeah,
you do,
yeah.
but you don't, right? You don't need a degree.
It comes in handy.
Yeah,
Yeah.
I know numbers.
Yeah.
You need management.
Yeah.
Hey, but that's one thing we got to say about real estate investing. Everyone gets in like, I'm going to be a wholesaler. I'm going to be a flipper. But no matter what you're doing, you're running a business.
Right. Absolutely.
At the end of the day, so you need the fundamental business knowledge. So that's probably definitely helpful. And so you left the pearly gates of GCU.
Beautiful place.
And then you went into traditional lending. So why'd you go to traditional lending? Like, why even lending?
I just kind of fell into it.
I was
out of college. I had no clue what I was going to do. Right? Because when you have a business degree, you can do everything.
Yeah.
Right?
Yep.
Maybe not be a heart surgeon kind of thing, but
Right.
you can do a lot of things. But I was kind of just in the job market. I heard the company I worked for was hiring, and I was like, they pay do base pay and they do commission. I'm like, hey, I'm totally fine with that. And yeah, I kind of just fell into it.
And what year
really
was
hard.
that?
That was about 2020.
So tell us about that experience.
Yeah, that was
COVID
crucial time.
was
Oh,
happening.
man, it was
What was
crazy.
the lending world like? Give us a brief picture.
Everyone needed to refi, right? I was mainly in the refi sector, right? So everyone should have refied, right? If you owned a house and you're going to be there long term, why not take advantage of a 2.5% rate?
Yeah.
Yep.
So it was like handing candy out to kids, right? You're just out there. Hey, you want to refi? Here's a waive a 2.5% rate. I'll cut the term on your loan. I'll lower your payments. It was great. So it was.
How much
again,
do you make on a loan, roughly?
I mean, we got paid
On a refi.
just per loan, so it wasn't like a basis points or anything like that.
Yeah.
So we made like about anywhere from $350 to $700 a loan, depending on quantity that you did. So I mean, I was doing, I would do like 21, 22 loans at $750 a pop.
Right. Cranking
Right
them
out of college.
Right out of college, I was killing it.
Amazing.
I was like in heaven, right? I'm like, hey, I'm just over here taking orders.
Right,
And
right.
making a lot of money. I was stoked. I loved it, right?
Yeah.
Mm-hmm.
No way not to. But yeah, then the market started to change. Rates started to go up.
Your colleagues started to disappear.
Yeah.
Yeah.
A lot.
Phone stopped ringing.
Yeah, phone stopped ringing, man. And it was just a lot of, it was really tough, right? Because when you're talking to people about refis and they already got 3.5%, 4% rates, sometimes even 2%.
Yep.
Right? You're trying to refi them still. And it's really hard to sell something when they go from a lower rate to a higher rate. Because, again, borrowers are very focused on rate, right? When you're talking about residential
Payment,
and you're
yeah.
living in
Payment,
it, you're thinking about your rate and your term, right? And your payment. Those are the three things you're talking about. So when I was in the, when the refi boom kind of stopped and rates started to go up, you're really starting to pitch, cash out refinance, right? Consolidating debt. So,
and you still hear a lot of that. Consolidate debt, take money out of your house, pay off high interest credit card loans, stuff like that.
Yeah, and it is super beneficial, right? Because I could take someone that had 26 years left on their mortgage, right, paying whatever $1,300 a month, but then they were spending another $1,000 on high interest debt, whether it's loans, credit card bills, whatever it is, and I would consolidate that. Their payment maybe would go up to $1,600. They're still saving, right, $400 or $500 a month on expenses, right?
Yeah.
So, and even though we would push it back to a 30-year loan, going from 26 to 30, people are already tied to spending that kind of cash, right? So they can just take the $300, $400, $500 that I'm saving them a month and reapply it to their mortgage and be done with their mortgage in 15 years or less, right? And that's really where the game changer is. But it's really hard to get people convinced into doing something like that because they're just looking at rolling all this debt into their mortgage.
Yeah, once people are set in a pattern, they're used to those trends. Every month they know, okay, I have to pay X amount of dollars on my mortgage, X amount of dollars on my credit cards, X amount of dollars on my credit card note, and then food and gas.
Right.
Those are like the big expense, unless you got a young kid, which is daycare. So once people understand what my monthly expenses is, they want to kind of set it and forget it. Right. And then when you throw something else in there saying, hey, this may be a better way, they say, yeah, but I'm kind of comfortable doing it the way I'm doing it. So
yeah. And that's the thing, right? It comes down to a lot of sales, right? You're really trying to educate a borrower on the benefits of a specific loan, right? Because again, you may set it and forget it, and you completely forget that you're spending $2,400 a month or more in expenses, right? But the idea of having a $1,300 mortgage is comfortable for you. But when you have a $1,600, $1,700 mortgage, but no other debt, you're just focused on that mortgage. You look mortgage to mortgage, and my mortgage is more expensive now. Even though you're saving money.
Cool, man. So what'd you do after that? Or obviously that fizzled out, or what happened?
It kind of fizzled out. The company that I was working for closed down their office that they had out here in Arizona.
Got it.
So, yeah, then I got into hard money. I went to like a startup hard money company. And that's what I got introduced into hard money, right? Learning how it was. Because when I did residential, I talked to people about, rental portfolios and rental properties. And I just only knew about the rental game, like long-term rentals, right? You buy a house, you rent it, and you're making $300-$500 a month. And that's just passive income, right? But I never thought about the hard money portion of things and flipping properties or flipping and holding. And so, yeah, the first hard money company that I worked for was my real introduction. Unfortunately, that company, as soon as I hopped on board, kind of started going downhill. Okay. So I was
Why'd they go downhill?
Yeah, wow.
Yeah, so their structure was they were funding the purchase of a home, right? They were helping a borrower acquire the property. Okay. But with that, we would give them a cash offer on the property.
Borrower
on
being
the back end.
a flipper.
The flipper.
Right,
Okay.
the investor.
The investor. So we would give them a cash offer on that property post-renovation. So they would have a guaranteed exit strategy. Now, of course, that sounds great, right? You have a guaranteed, for an investor, that's a great exit. You already have a guaranteed exit strategy. We're buying the house back in 3 to 5 days once it's complete.
Yeah.
It's money in the bank.
Yep. We would provide them a scope of work, right? They basically just had instructions, and they complete the job, and they collect the cash, right? So when the market was good, it was a great business model, right? Because what the company would do is they would buy all these properties back, create a portfolio of homes, and sell it to large hedge funds.
Mm-hmm.
So then it would buy portfolios of 100, 200 properties at a time, and it was great for the business.
Right.
Until the end of 2022.
Yeah.
That's when hedge funds completely stopped buying, and we were buying these houses back. And, once that started to change, we were just acquiring properties and we couldn't disposition them.
Got it.
Didn't pencil anymore.
Yeah.
So then you left there, it sounds like, or they
closed down.
They closed down.
I was on the plane to go to Minnesota for a little family vacation. I'm on the phone on the plane. I get a text from one of my coworkers. Like, so we closed down. I'm like,
wow.
Great,
wow.
Great
Okay.
start to the vacation. Right?
Yeah, vacation is going to be a little bit longer now.
Maybe a little bit longer, maybe a little bit cheaper. We can go out to eat now.
So in a nice way, I'm glad you experienced all that and so early in the business, right? Like, that's amazing. So what would you say you learned from this experience? Because now you're with a legit company, and we'll get into that. So it's like, what did you learn from this last few years of lending?
Well, I just learned the ins and outs of how it worked, right? Because we're writing the scope of work for the investor. So I got to see a lot of scope of works and know what essentially goes into it and how much things should cost.
Great.
Right? So that helps me, of course, now with my company, where I can take a look at someone's scope of work and know, hey, you're maybe overpaying for this rehab or you're not overpaying for this rehab. So that was probably one of the biggest things on how I got to see the business operate, how the hard money process works, right? They bring a property, they bring an estimated rehab, then we're writing the scope of work for them. I got to see how draw processes work. Cool. I got to see how the purchase side of things work, because again, I was only doing refis up until then. So I got to see purchase, I got to see again draws, scope of works, and then I got to see the closing. So it was just, I got a really good in-depth of how everything works in that area.
Great,
right?
Man.
Okay.
Awesome. And if I could just share on that, so I've been through that world as well. When I got into the business, luckily, I'm glad I experienced it in the very beginning, which allowed me to take it and stay in the business until a full cycle. So stick to your numbers, members, AZREIA members, right? So it's like you're in the sales world, you always ride the wave, right? But here we teach you got to stick to the fundamentals. You got to have your numbers. You got to stick to them. Don't lower your margins just so you can get a deal and get all needy. That's where everyone got caught. A lot of flippers got caught in that last turn, and companies like that went out of business because they jumped in, rode the market, then everyone's out.
Yeah. Motivated buyers.
And that's kind of what it is, right? And that's why you see a lot of hard money lenders come and go, right? They come into the business when there's a boom of some sort, or they have a lot of capital. They start lending this money out. Payoffs aren't coming in. You run out of cash, right?
It's like the storm chasers for the roofs and
absolutely.
But that's part of the world, right?
Yeah.
So just be careful when you're out there as things get hot. Just understand what you're getting into and stick to the fundamentals. But that transitions to your next position here at Boomerang, one of our business associates. Yeah. And obviously they were around before the little
They've been around
boom,
for a while.
and they're still here after the boom. So that has a lot to say about the quality of business they provide. So tell us, how's it? What do you do at Boomerang, and how's that going?
Yeah, so I'm a loan officer there, right? So I'm writing loans, man. I'm giving out quotes. I'm making sure I get all docs I need for closing and for funding deals.
So what are some of the? So just being a loan officer, we get that, but what is it? So if I was to come to you and say, hey, I got this deal or possible deal, what do I need to provide you, Alex?
Yeah, all I need is an address and a purchase price, right? That'll give me a basic information of what I need to look for at a property. And again, with my previous experience, I kind of know what to look for in a house and have a good idea of how much a rehab should cost, right?
Okay.
If you want to give me a rehab amount, I'm happy to take that, right? Because I'll usually ask you how much are you thinking you're going to need for rehab,
right?
That way I'm going to be able to put that into consideration in the quote and be able to see the numbers. And sometimes I might tell you, like, hey, maybe this rehab's a little bit high. Can you kind of bring this down about $5,000? Do you think you can kind of shave off the price there a little bit? Find cheaper resources or whatever it is that you can bring down the cost, because the less amount of money you spend on rehab may be the bigger margin that you're going to have at the end.
Yeah.
Right? Now, you don't want to cheap out on your deal, right? But at the same time, sometimes you may be overpaying for something.
Do you have, since you're looking at a lot of renovations, you have experience with scope of work in today's market, is there like, I'm assuming you're doing, what are a lot of your ARVs on these houses? 400, 500, 600, give or take?
It really depends, man. I mean, I do a lot of business out in Dallas, right?
Okay.
Dallas, I have a lot of ARVs in the 200 range, 250.
Mm-hmm.
I also have borrowers buying a house for, $100,000, which is crazy.
Right.
Arizona specifically, we're seeing anywhere from, I want to say 350 to 600,000.
Okay.
Is kind of the typical.
What would you say the average renovation cost that you're seeing the flippers deal with? A lot of people like to know that stuff. So
yeah, absolutely. So,
roughly, every house is different. We get it,
obviously,
but just
right? Again, if you're going just with a basic cosmetic flip, you're not doing anything roof, foundation kind of stuff.
Yeah,
you're probably 1,500 square feet. You're probably going to be looking at anywhere from $35,000 to $50,000 in rehab. That's kind of
cool,
kind of average.
Yep. It's typical.
So good renovation costs there. You have a question?
What about coming up with comps? Do you run comps? So if I'm looking at a property and I'm like, hey, you know what, I think the ARV is X. Do you go back, do you run comps, or do you have to send it to an underwriter to run those comps? Because speed is needed in this market, right?
Absolutely. So, one of the nice things about Boomerang is we all underwrite our own deals.
Okay.
So if you're on a way to look at a property, you'll be driving there, you send me the address, price, whatever your rehab amount is, I'll look at my own comps, I'll underwrite the deal, and I'll get you a quote before you even get to the property. So I can get quotes out to you in 5-10 minutes.
That's
right?
excellent.
And I think that's a game changer, because you can just show up at a property and already be pre-approved.
Yeah.
You know if the numbers are going to work or not on this deal based on comps that I'm going to pull for you.
A couple things there. So one, I love that 5-10 minutes, right? That's a good way to say, hey, is this, if my hard money lender isn't really thinking this is a deal, that makes it good for you to double check your work.
Absolutely.
Right? Depending what you're, if we're talking about flipping, right?
Yeah, absolutely. And I have a lot of investors that, I deal with like third party, brokers and sometimes private lenders sometimes, right? That want to kind of fund the gap for my investors. And the big selling point is that if I'm on board with funding the deal, they're usually really comfortable with the deal already.
Yeah,
because you're taking a bigger risk.
Yeah, we're taking the biggest chunk. If I'm willing to lend, $250,000 and you have to lend them 30.
Yeah.
Right. I think I'm at a bigger loss if anything were to go sideways. Right.
I still like the 5 to 10 minute thing. So what I love about that, one, is if you're an investor sitting out there and you have analysis paralysis, you're not writing offers, you're comping deals, and you're confident. You could, in 10 minutes, you could confidently say this is what you got to write on this house.
Yeah.
So if you're out there stalling on making offers and getting your deal flow, there's no excuse, right? So you could look at a property that fast and have a legit, confident offer to present to somebody, because offers are our highest income generating activity. Yeah. So get those out. Ask Alex, and will you give this person or a member a proof of funds so they do feel confident when they write those offers?
Absolutely. I can get a proof of funds over to you.
Okay.
5-10 minutes again, right?
Do you got to pull my credit? Do you got to check anything?
Yeah, we're completely asset based. So we're not pulling credit, looking at financials. We don't do any appraisals or surveys on the property, right? So as long as, again, asset based. So as long as the numbers make sense, and we want to be partners in the deal with you guys, right? So as long as you're making money, right, and you're going to be able to sell the property, and we're confident that you're going to be able to sell the property because the numbers are there, we're going to be happy to lend the money out, right? So, and that, no credit, no income, no appraisal also helps closing time frame, right? So we can fund deals in as little as 24 hours, right? Again, I tell all my investors, I don't want every deal you send me to be a 24-hour deal. Right? It's stressful, but we can do that. Usually 2-3 days is our turnaround time, right? And we can comfortably do that. But yeah, if you're ever in a pinch, 24-hour closings is something that's on the table.
So what margins are you guys looking for it to be a comfortable deal for you guys to fund? Is it 30% to ARV? Is it 50? Is it 70? Kind of what?
Yep. So we like to operate at 69.999%, right? Anything below 70% of ARV, right? That's kind of our sweet spot. Usually if we have a deal that we know may sell for more than what the ARV is because of, quality of rehab, or there may not be a ton of comps in the area, but it's a great area. And let's say my ARV is, or my loan to value is 72, 73%. What we do is usually just pump up that down payment a little bit, just so we can get below that 70%.
Love it.
Okay.
But chances that I'm going to do that, very small,
Okay.
because I can usually find comps for the most part, right? Unless you're doing something that's,
Yeah.
real out there, right?
Right.
Can you give us a couple tips? What are your some favorite comping tips?
Oh man, comping.
Like help. I want them to be able to like do their work,
Right.
run it by you. You be, and then you're like, you know what? Yeah, perfect.
You
know
got
what
it.
I mean?
Yep.
Like, all right. And I want the listener also to be like, hey, here's the documents you need. Like, I want everyone to be smooth as possible when they call you.
Yeah.
So what are some comping tips that you could share?
So comping tips is, I have a property that finished product is going to be a 3-2 at least, right? 2-bedroom houses, harder to sell, right?
Yeah.
So 3-2, 4-2, right? To me, bedroom count doesn't really matter too much. If I have a comp that's a 4-2 and a 3-2, as long as the square footage is virtually, pretty close, within about 20%, I can use both comps.
Got it.
Right. So for me, square footage is really what matters. Location obviously matters.
Right.
One thing to always pay attention to is year built.
Okay.
Right. Because a house from 1950 is probably not going to be the same as a house from 1990. Right.
Yeah.
So I always keep an eye on that.
That's huge because a lot of people, they're always like, oh, they got a 2016 build and they got a 1940 house in the same, because you get those infills that get new builds, but it's like, you can't comp those.
That's exactly it, right? I have investors sometimes send me deals, and everything in the area that's sold in the past 6 to 9 months is a new build.
Yeah.
Right? And I'm like, I don't have comps for this. I don't know what a rehabbed house is going to sell for.
What do you think about that? Like, let's say a flipper, they're going into a neighborhood with a lot of new builds in the area, or build to rents. There's a lot of that going on.
Right.
New apartment complexes, and you got maybe less housing and or older housing. Do you get that a lot? And what's your thoughts around that?
Yeah, I just think it's a little tougher.
Tougher, okay.
Right? Because again, we want to be partners in the deal. We want to make sure that obviously you guys are making money before we can fund a deal. Right? Everyone has to make money, because it's not just us making money. Of course, we're the ones that want to have the most money in the deal, but you got to think about realtor costs, right? You have to think about anything that may go sideways on the house, right? Anything that you weren't expected.
Concessions.
Yeah, concessions. So it's when you're talking about, we have a lot of new builds and stuff like that, usually we're going to want, maybe 20% down, a little higher down payment.
Okay.
But yeah, I mean,
Just depends on the risk of the property.
it's a risk factor, right?
Okay.
We want to be I don't want to be too conservative ever, right? Because that hurts the investor, right? Because if you're too conservative, then every deal I'm having, you're bringing 20% down, and I don't want my investor bringing 20% down.
What do you guys shoot for? 15?
We're usually at 15 with rehab, 10 without, right?
Okay.
But our 10% down without rehab only applies if the property is $200,000 or more on the purchase price. So typically anything below that, we're going to want either the rehab included, or we're going to want a higher down payment.
What do your loan products look like right now?
So Arizona, we're 11% in a point.
Okay.
Right. So it's really competitive for where we're at. 11% a point.
What's a point? So,
Yeah, 1% of the loan. $100,000,
There you go.
$1,000,
$1,000.
$200,000, $2,000. Right.
Got it.
Yeah, we have a $995 doc fee. Right, it's just for paperwork, but other than that, no other costs. Right, you're not paying for an appraisal or credit report.
Yep.
None of that.
Love it.
So,
Close quick, simple product. What else should we cover? On
Draw
here?
schedule.
Yeah.
For rehab.
Do you guys do that? Do you guys fund the renovations?
Absolutely.
Okay.
We do everything in-house, right? We try to do everything in-house, right? So from servicing, payoffs, all that's done through Boomerang. Draw schedule. Our draw process is super simple, right? I know other lenders out there may be charging for you to do a draw, whether it's $150, $100, $200, whatever it is.
That's one of the things that's always tricky, right? It's because you're borrowing me the money, but then you want me to pay you to send me the money in order for me to finish the the project. So no draw fees.
No draw fees, right? Okay. So all we require is pictures of completed work and invoices. Okay. So example is, if you're working on a kitchen right now, and you bought cabinets, you bought countertops, you bought a sink, you buy all the materials, install it, stand back, take a picture, tell me send an invoice of how much you paid for that.
Okay.
And we do everything via ACH. So if you send it early in the morning and everything's in order, we usually can get the funds back to you the same day, if not next business day.
Wow.
So it's upfront. So as the investor, because you're saying send the pictures and then it's refunded back. So that investor need to make sure they have that upfront money to do the work, and then you guys refund it, reimburse it. Okay.
Yeah. Wow. And, you know, when you have lenders that are charging you $100, $200 at a time, you might want to not do as many draws.
Right.
Right? You want to probably maybe have $10,000, $15,000, $20,000 sitting in the bank, or a credit card availability, right? Credit limit, so you can pay everything up front. So you do one draw or two draws during the process. With us, we can do as many draws as you want because we're not charging you anything for it. And we don't send any appraiser out there or an inspector to verify that the work's being done.
Okay.
Right. So again, it comes up. It's a lot in the honor system.
Right.
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 If we have an investor that kind of does mess with us, then we're probably going to require you. We're going to start sending someone out there. But for the most part, we don't.
Love it. Well, hard money's easy.
It's cake.
12-month loan, 6-month loan?
6-month loan.
Okay.
Right.
Okay.
Option to extend if you need to.
Yeah.
Ideally, you want to get in and out of the house as quick as possible. But if you have a giant project with great margins, right, then maybe you want a little longer term, then we can always extend that for you. But yeah, off the bat, it's going to be 6 months.
Is there anything we're not asking you that our members should know?
Oh man, that's a tricky question. You got me there.
I know we said snowball questions.
Yeah.
No. This seriously, I know it's on the spot. It's like not simple, but just any questions when it's come to preparing, when they're looking at houses, when they're
as far as what I'm going to need to fund the deal, right? I think that's
what do we
always
need?
Good to know.
Property address, you said.
I need address, purchase price, rehab amount if you're using our rehab, right?
Got it. Then a cashier's check when it's time to fund for their 10%, 20%.
Cashier's check, wire transfer, right? Whatever your title company is going to require, however you're wanting to do it with your title company. As far as docs that I need up front, I need a purchase contract, right? I'm going to need a scope of work, a proof of funds, and we got 2 little applications. One of them is your personal application, and one of them is your property application you fill out. For property, you tell us exactly I'm going to add X amount of square feet to the house, adding an extra bedroom. Just a little general overview of what the project's going to look like.
Love it.
Do you all have like a preferred title company that you prefer to work with?
I mean, we're pretty open. We're not really necessarily against any title companies. I know one of our big referrals is American Title.
Yep.
Okay.
So they're really good title companies. So
we're just trying to make the process as easy as possible for you, Alex.
Absolutely.
Yeah. No, that's great, man.
Yep.
And one thing I do like about Boomerang is I travel a lot for business, right? So we each are assigned a state. So I fly to Dallas, Fort Worth, probably once or twice a month, and I go to networking events. And one of the proudest things that made me feel really good was last week I was in Dallas.
Okay.
And I went to a wholesaler event. I walked in there, little name tag said Boomerang, and they're just singing us praises the whole time. They're just like,
excellent.
We love working with Boomerang. You guys make it easy. Every time that you guys say you're going to fund a deal, you guys are there to fund the deal.
Yep.
That's what it's all about.
Because so many horror stories. That's why the 24-hour closings are important for us, because that's how I got a lot of my business when I started out, was because borrowers would call me, or investors would call me saying, hey, I got to the closing table. My lender didn't fund my deal. They pulled out of the deal last minute. My close of escrow's tomorrow. Can you do it?
Yeah, man.
Right.
You guys have came through for me on quite a few deals, and wholesalers love anyone that can close. Cash buyer, hard money lender. You close quick, we love you.
It don't matter. We don't care where the money comes from.
At the end of the day, everyone just wants to make money,
Yeah,
right?
yeah.
That's all what it's all about, right? The realtor wants to make money. The wholesaler wants to make money. We want to make money. The investor
Less
wants to
friction
make
as
money.
possible.
Yep.
Right?
Let's have a seamless transaction.
Yeah.
Well, Alex, how can we find you? How can we get in touch with you, man?
Hey, I mean, a couple different ways. My best way is my direct cell. I don't know if you guys are going to have my little name.
Give it to them.
Your number.
Direct cell is 651-925-7320.
Cool.
Okay.
I don't really take days off. You always tell me I'm usually always available. If I don't, I'll be calling back.
Okay.
But remember, don't call me at 2 a.m. I'll probably be sleeping.
Yeah.
I got
fair
a daughter at home, 1-year-old. I got a newborn or a baby in the oven doing April.
Oh, wow.
So I probably won't be picking up the phone at 2. Actually, maybe, because if the baby
might be
wakes
awake
up,
already.
Yeah, you might
maybe
be
it might
awake.
wake me up.
Yeah.
So.
Running comps. Yeah.
Okay.
Yeah, you can email me, alexander@boomerangcapital.com.
Okay.
So,
And we see you at the AZREIA events.
Yep.
AZREIA events, I'll be there.
Awesome.
Wednesday night. Last Wednesday of the month, fix and flip.
Fix and flip. Last Wednesday of the month. Monthly meeting, second Monday of the month, which you guys have a booth at. So, yeah, man, give Alex a call.
Yep.
See what he has to offer.
So you guys know exactly what to do. Reach out to Alex if you need money, if you're looking at a deal, if you concerned about comps, reach out to Alex. That way he can fund your deal. He's available, right? So thank you once again, guys, for being loyal listeners to AZREIA. If you're not a member, I don't know what you're waiting for. Go to AZREIA.org. That's AZREIA.org. The memberships are completely cheap. Right? Very, very cheap for all of the content. We do, 16, 15 events a month? So every other day almost there's something going on that you can be a part of. So go to AZREIA.org. We would love for you to be a part of the community and be a part of the family.
Let's say affordable. And very valuable.
Very valuable, very affordable.
I think that's thank you. Well worth it. Change your life.
So
there you go.
So you guys know what to do. Go to AZREIA.org and see what we have to offer for you.
Thank you.
Okay.
Awesome.
All right.
Thanks for listening to the AZREIA Show with your hosts, Marcus Maloney and Mike Del Prete. We hope you enjoyed this episode. If you found this information valuable, head over to AZREIA.org and learn more about our community.